Hello, this is the chart profit video. We're approaching 2 hours into the trading day, Friday 19th of May. Looking at today's pre-open, this is the E-mini S&P. On Wednesday down here we marked aggressive selling. That's the red at low. 80% of these times, these red at bottom lows are tested either the following day or within 2 days. We saw that, and very often they lead to further weakness, which is why I said on pre-open on Thursday that red at bottom low means new long trades are eliminated for me. Also went on to say here there is no obvious time support that is close, so I'm pretty cautious here, but there is a 3-month value area low at 23.47, which was about down here. A rejected test of that value area low and significant buying being marked would be the most optimistic development. And also said yesterday that pre-open today 23.47 has been briefly tested. Just to illustrate that, we're looking at the E-mini distribution here back about a month. This dotted line, as you can see, 23.47 is the value area low of this distribution. There's the test pre-open on Thursday, and we saw a rally back from there. So if we look at the 30-minute chart, here's the test below 23.47. It rallied back to the halfway point off the previous high, noted as resistance in today's pre-open, and currently the E-mini is printing back above that level. So as I said, pre-open on Thursday, a rejected test of that value area low, and significant buying being marked would be the most optimistic development. Well, so far we've seen that rejected test. Now looking for some evidence of significant buying here. Something else worth noting, I said pre-open today that enough time was spent at 23.53 to migrate the 4-month point of control to that level. Now this gives us a close level of time support, which is useful. That level being here. So back on the half-hour chart, we can see this red line here representing the 4-month point of control support now, 23.53. Having that level below current price action is really useful. As I mentioned, price below this level would be a real indication of further weakness. But currently, from this analysis, because that point of control migrated down to that level and we're printing above it, the E-mini is actually back in a strong price location. There are definitely negatives that we'll look at in a second, but from this analysis, significant buying marked above that level would be an indication higher. Okay, here's a short-term negative. We're looking at the breadth indicators through Thursday, and these two bottom indicators here are in a position weak enough to give us this red reading, negative reading here on the pulse chart for breadth. I really want to see that turning back to green, indicating supportive daily breadth. And at the bottom here we've got the price oscillator, currently still above zero, indicating trend up, but momentum has been falling for the last few days. Ideally you want to see that picking up again. This is my version of the right X assets ratio. Just concentrate on this little section on the right hand side here, the most recent action. It's quite a down day on Wednesday, as we know on the chart, but no fear registered in the ratio at the bottom here. In fact, it's ticked up slightly. Being a contrarian indicator, that's just a little concerning. If we look at the bull fund assets in isolation over the last few days here, and the bear fund assets here, you can see they've barely moved. Amongst the other sentiment indicators that I follow, most worthy of note this week is that the bulls percentage in the public poll from AAII, that was sharply lower, 23.9% this week, and that is the lowest bulls percentage since November. Early November, around the time of this low here, after that correction. At that point the bulls percentage was just very slightly lower than it currently is, indicating that right now participants in this poll are as bearish as they were at this point. Remembering these are contrarian indicators. Very little change in the Investors Intelligence poll this week. You can read the notes in the ebook this Monday. Lipper US fund flows reported equity funds, including ETF outflows of 1.2 billion. That's the third consecutive week of outflows. 4-week flow, the black line here, almost exactly at zero, so very neutral reading here. Let's look at some current charts. This is the spider. 3-month support here, 236.18. Obviously tested on Wednesday. Currently we're seeing a bounce back to 238.50, which is the 2-month. This level here So a good bounce back. Price back above this level up here would put the spider back in a strong price location. Important level on the Russell 2000 ETF IWM is 136. Here that's the 16-month point of control. Currently chart has recovered back slightly above that level. UK FTSE 100 held up pretty well this week, closing today about now, and looks as though it will close the week slightly higher. This is TLT, the T-bond ETF. Major support level on this chart down at 119 down here, but of the current distribution, the 8-month point of control is here at 121.63. It's following a couple of weeks where price was actually below that level. We've bounced back above it this week, and this chart, the T-bonds in a strong position here. Gold has also bounced back. This is GLD, the gold ETF. It's actually recovered back to its major at 119.84, and that seems to have capped the price action this week. Again, price back above that level would put it in a stronger location. Right now this resistance has come into play here, actually, as it did back over here in February. This is the oil fund ETF USO. A 4-month controlling price has emerged at 10.28 just this week. A little bit of resistance here for a few days, but today we are printing above that level. Longer term analysis says that if we're below the major, which is up here at 11.44, in the longer term picture oil is in a weak position, but we've just moved stronger here, which suggests in the short term a pretty healthy position. Price back below 10.28 was immediately put the chart back in a weaker position. This is the dollar index. Very early last month we saw a rejected probe here up into the 6-month point of control, and then that was followed by breakdown of the previous low here. Currently we're on the lowest level since back over here in November. I've been saying since this 6-month emerged over here somewhere, and since we broke below that level, this is a weak looking chart, and a retest of this more important level down here at 95.57 looks the most likely way this chart's going to play out, unless we see some kind of migration of these controlling prices. There's a mirror image of that, the Euro FX chart, and a new high here again since back in November. We've seen this test here of the 7-month back in April, and been really strong since then. So a dollar weak in this chart, and also here against the pound we saw the 15-month move up to 124.78 in here somewhere, and chart's been strong since price broke back above that level at this point. Finally the dollar yen saw a rally back in April to probe up into the 4-month at 113.61, and we've seen that rejected, and again a weak looking chart. So the dollar in the 3 charts we've looked at again this week looking weak. No sign of strength with the dollar there. Bonds have moved into a strong position. Gold has hit resistance, and the stock market is trying to recover. Okay, that concludes the roundup of the major charts at the end of this week. Once again, I wish you a good weekend, and thank you for watching.